getting our head out of the water. Now we are making that trajectory above 50. Meantime, business remain very sluggish as well. The data suggests businesses remain very cautious on new hirings. We'll get to that in a moment, but I'll take that away. Let's go to the sales growth. In terms of the outlook from businesses, industries, manufacturers, and others, this is the sales growth index, and that shows that, and this just tells you that consumer confidence is still very low in the economy. The disposable income of Nigerians is very, very low, so we're not yet out of the woods as far as that is concerned, even though we're above 50 as far as the SMI reading is concerned. And you can see that number there. You see very deep decline between August of 2015 and December last year. It was terrible. But, of course, these things are a little bit tapering, but that is not as significant as you can see on the business confidence and a few other readings. Then let's go to the prices. That is very nasty. Look at that wobbling data there. As you see, starting the prices in terms of what prices charged. This is the prices that consumers pay. And that tells you the inflation story. Look at that. We're just about 70%, 70.0 reading, about 75 reading in August last year. And that tells you that right now you can tie the sales growth index with the prices charged, and you find Nigerians can barely afford a number of the things they used to. So because prices remain really high, that tells you the inflation story. But of course, a bit of a trending downwards, as some analysts have said, because a price of petrol and diesel and a few other things seem to be a little bit stable, but we're still above 50. And that tells you that the prices charged still very uncomfortable for many Nigerians. And finally, the new hirings, what you call the staffing levels. This is where your jobless data, unemployment data, speaks to. You can see 2013, 2014 August were a little bit very decent. Then the track just went off the curve. And you see where we're now at the bottom of that chart. Look at where we're just around 30 reading by December last year, with a bit of a gentle knock. If you look at the PMIs between May, June, and July this year, we've seen a bit of a gentle uptick, but we're still below the water. We're just touching around the 50.0 threshold this month of August. So that means our unemployment is very nasty to the downside. And that's a bit of a snapshot of Nigeria's economy in the month of August from the folks at World Economics in London. Let's come back to the FX market here. Last week, where did we finish? Sources told Channel's Business News that the total interventions by the central bank last week was almost $500 million, $464 million in total into the various market segments. This was an aggressive week in which the regulator sold seriously into the various market segments, $464 million US dollars. At the interbank market, what we call the NAFEX, the Nigeria Autonomous Foreign Exchange Fixing Market, that's the daily trading. Sources say one average of $150 million was sold every day last week. And if you put a bit of a total there, you know what the figure will show you. Over the last 3 months, the total NAFEX trading was about 4.7 billion US dollars. We're talking about the NAFEX here, not the INE. The NAFEX, that's the new market that the central bank has opened up for banks to quote their buy and sell FX volume on a daily basis transparently on the platform, and that is about 4.7 billion US dollars. Over the last few days, we've seen Nigeria's foreign FX reserves around 31.9 billion US dollars. Sources said this went down slightly, but has since now climbed back to the doorstep of 32 billion US dollars. And part of the story last week also was that at the FMDQ OTC Securities Exchange, we saw the maturity and settlement of the 14th OTC FX futures contract, 488 million US dollars matured and settled, and the central bank replaced that with another contract maturing 24th of August 2018. That was 1 billion US dollars. That's what the replacement was. So the central bank, as soon as the OTC FX futures contract matures and settled, then the central bank had always done a replacement over the last 1 year. That was the 14th of those contracts that had been floated within the last 1 year. Okay, let's step into the markets review for last week. And, okay, let's just deal with the FX numbers there, shall we? Okay, let's bring it back. The Naira fell slightly on Friday. The CBN reference spot FX market by that margin, 0.03%, 305.65. Nothing much changing there. You see the interbank there. You've seen all of that at the FX market. Those are the Naira, dollar Naira, pound Naira, and the euro Naira on Friday. Then you've got the street market. On the streets, that's the Naira down almost 1% on the dollar, 370. But gained 0.42 on the pound at 475 and flat on the euro at 430. The I&E window, the Naira was 0.63% positive, 362.89. The stock market was a little bit nasty last week, 3.35%, despite a gentle upside on Thursday. The market finished off 3.35% in the red, a very sharp decline there on the market. We're below the 37,000. We've seen 38,000 this month. We're now down slightly below 37,000 level, and you can see the market cap there. Let's just move ahead quickly and see the sectoral performance. The consumer goods was down 2.76. The industrial was the most beaten last week, and we all know why that was. Sorry, folks, all that should be in red. There's no single green shoot on that market index for the last week. It's all green. That's a negative 0.45%. Consumer goods was down 2.76. Industrial was down 6.02. Insurance was down 1.01. And oil and gas was down 2.31. So it was all red. There's no single green shoot across those 5 sector performances reading in the week we just finished. We'll talk about the fixed income market when we come back after the break. But the big story, of course, is that President Muhammadu Buhari is back in the country and back in office, and he spoke this morning. So we'll talk about the policies and economies and how much of this will impact us moving forward. Later on, we'll talk about the markets as well. We'll squeeze everything together into a single cap for you.